What's going on, everybody? It's Stas here. So the stock market got hit today, guys. Got hit pretty hard. S&P 500 down 60 points, down 1.8%. Dow Jones down 405 points, down 1.5%. And the tech-heavy NASDAQ down 240, down a little bit over 2%. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over the top stocks that I'm watching here and looking to trade as the stock market is selling off. We're getting a bit volatile, and I also want to share with you guys what I've been doing. I want to go over what stocks I'm involved with and kind of where my head is at, some psychology here moving forward in a very volatile stock market. So if you guys find value in the video, hit that like button for me, consider subscribing to the channel, and check out all the free links down below if you want to join the Strive Smart Discord chat, our Facebook group, and if you want one free stock from Webull valued up to $1,600. All you have to do is deposit $100 into that Webull account using my link, and you get one free stock, and I also get a free stock since it is an affiliate link, and I do appreciate you guys if you do use that. So let's get started with the video, guys, and let me tell you, we called this out yesterday. We called this bull trap out yesterday, and the main reason why we called this out was because, one, the S&P 500 failed breaking out of the high from Friday at 3450, and two, we ended up closing the day yesterday. If you guys recall, I mentioned this in yesterday's video. We closed the day on a pretty big and sharp downswing from 34.25 down to about 33.98. So that told me one of two things. Well, really one thing, that really two things actually. One, we actually got some profit taking at the end of the day. And two, again, we failed breaking out of that big resistance from Friday. And what do you know? Today opened up. We failed taking out those highs from yesterday at exactly 34.25, guys. If you take a look, that's exactly where the S&P double topped yesterday, right? We failed taking that out today. We tried multiple times, 5-6 times here. Ultimately, we kind of formed a little head and shoulder. You guys can see it here on the S&P. And then once 34.15 took out on the bottom side today, that's when the floor completely dropped on the S&P, and it was a bloodbath from there. I mean, we went from 34.15 all the way down to 33.29, and that's a loss. I mean, today's loss, guys, was around 100 points from top to bottom on the S&P. That's pretty volatile, and the VIX is up about 90 points here, and it was up all day, pretty much rising the entire day. And if you guys don't know what the VIX is, it's a fear gauge, pretty much. It's a volatility index. So when this is up, you know, hey, there's a lot of volatility out there. The markets are most likely moving down aggressively, and that's exactly what we saw today. So at this point, guys, we can see more downside in the market, no doubt about it. The fact that we failed breaking out of those highs from Friday, we're moving right back down to test the lows from, what was this? Was this on Tuesday? You know, we're testing the lows from Tuesday now, and especially tomorrow, if we break 33.30, the level we're at right now, which we held on Tuesday, I think we're going to get another leg down here in the markets on the S&P 500, and of course the NASDAQ and the Dow will probably follow as well, because the markets pretty much move in unison for the most part, right? And if we do see that 33.30 break, we might be going down. We have to pull back to this 4-hour chart to take a look here. We might be going down to 32.80. 32.80 is another big level, and this could be, guys, where the S&P, I'm not calling a bottom here. That's very difficult to do. Very tricky game, guys. But if we do get to 32.80, that's going to be another, let's take a look here, another 1 to 2% gap down from where we are now. This could be maybe where we find some support at this 180 SMA on the 4-hour chart, and maybe another relief rally like we saw yesterday, like we called out yesterday, right? We saw the relief rally, which turned into the bull trap, so we might see that again. If 32.80 hits, we might relief rally back up to where we are now, 33.30, test that as resistance, right? And then maybe fill back down to 33 or 3280 rather. So that's kind of the pattern that I'm seeing here. The bears are very much still in charge here in the short term on the S&P, and that's for all the indexes. The Dow Jones, very same thing, very similar, right? We failed taking out those highs from Friday. We got rejected under this 180 and 50 SMA. We're about to see a bearish cross on this what is this? The 20-day chart, which a bearish chart cross is when a smaller time frame moving average crosses below a larger time frame moving average. That could really signal more downside to come, and you guys can see the 50 is about to cross under. It is crossing under the 180 SMA here, so that's not looking too good. If 27,400 breaks, 27,500 breaks here on the Dow, we might see a leg down maybe to $27,000 or points here. You guys can see on the Dow Jones, and from there we might see a relief rally back up to 27,500, right? If we hit that 180 SMA and pop off. So Dow Jones has a little bit more downside in my opinion, maybe 2% if that $27,500 level breaks. And the tech-heavy NASDAQ today, guys, like we've talked about on these videos, and by the way, if you haven't subscribed to the channel, you got to do that because every Monday through Friday we're making videos like this. And what we talked about is that when the markets go up aggressively, typically the NASDAQ leads the way. Sometimes the Russell leads the way if we get some vaccine news or some stimulus news, because that really helps small businesses, but which is what the Russell's comprised of. But for the most part, when we see the markets move up, NASDAQ beats, and when we see the markets move down, the NASDAQ also gets hit for the most part the hardest. And today it got hit 2%, which is the hardest out of the bunch. Let me check the Russell here. The Russell only went down 1.2%. So the NASDAQ got hit pretty hard. And you guys can see on the 10-day, 30-minute chart, we failed breaking out of the high from Friday, very similar to the S&P and the Dow. And now we're going to test the lows from Tuesday, right around 11,000. And I think if 11,000 points breaks here on the NASDAQ, watch out below, guys. Watch out below. We could be going down mid-10,000s. 10,700 is a major level here, and maybe even 10,800, 900, right around this 180 SMA on the 4-hour chart. That is where we could go down to as well, which gives the NASDAQ about 2% downside from here. And let's say it goes down to 10,700. That's more like, let's take a look, 3 to 4% downside. So bears are in charge, guys, no doubt about it in the short term here in the stock market, judging in the past, over the past couple of days. Obviously, in the long-term perspective, from a long-term perspective, the bulls are still in charge. I mean, yeah, long-term, the uptrends are still intact. This is simply a little blip in the road, but if we're really looking at the nitty-gritty, short-term stuff here, the bears are in charge. So let me know down below in the comments, what are your thoughts, guys? I'd love to know your opinions on the market, moves you're making. Are you heavy in the market? Are you heavier cash? Now let's talk about what I did, kind of what I'm involved with, and my mentality in this market today. So you guys know, if you watched my video yesterday, and I don't like tooting my horn a lot, but we talked about this and called it out. I called this a bull trap, right? So I didn't add any. Yesterday I think I added a little bit, but today I didn't add anything, right? I didn't make any moves today because I'm not looking to get trapped in that bull trap. I'm not forcing my money. I don't want to force any money into the stock market right now when there's a chance we go lower. And truthfully, guys, I want to wait and see until we see a clear-cut reversal in the stock market, before adding a heavier amount to the positions I have. And with that being said, it's not like I don't have any positions and I'm 100% cash, because that's not true. I do have some positions. I'm in Workhorse. I'm in WKHS. This is one that I filled yesterday at $23. So I'm a little bit under the water here on Workhorse. It's trading at $22.40 right now. It actually took a breather day today, down 5%, and I'm extremely happy about that, because we've seen Workhorse ever since we called it out on the break above 20. It's gone to 25 in a couple of days. So that's a move of, let's say, 15-20%. So the fact that it's pulling down 5%, it's shaking some weak hands, profit taking, that's very healthy. And for me, again, I'm in at $23, and I'm not in with a huge position. I'm in with a small scaled-in position, but I plan on adding more. The idea is to to add more at $20, $21, and kind of average in, and then build a nice base position around $20. That's my goal right now on Workhorse, and to slowly ride it back up to the mid-20s. And honestly, guys, I think Workhorse, I don't know when, but I think in the next couple of weeks, maybe a month or two, if I were to guess, I think it's going to go above $30. And that's just me speculating here. Don't just buy it because I'm saying that. Always do your own due diligence, your own research. I am not a financial advisor. This is simply what I'm doing here, guys, right? So Workhorse, I'm in $23. I'm still in Tesla, which, believe it or not, guys, Tesla today was green. Somehow, guys, Tesla was green today by the grace of the trading gods out there. Up 1.4%. Up $5 on the day, and I'm in at 487, 418, and 355. So my average position, and I actually went heavier at 355. I went really light at 487, so my average is actually right around $400. So I was actually very close to being green earlier today. If you guys take a look here at Tesla, it was close to 400. It was right around 400, so I was pretty much break even, but I didn't add any more. I didn't sell anything. I'm just holding on to my Tesla position here, and I'm still holding on to NVIDIA. Good old NVIDIA here, guys, which was down 3%. I'm in at $519 per share. The uptrend seems like it's still holding overall, but we did see a bit of a bull trap with NVIDIA. We did not break out of that 50 SMA, this little rally that it saw from 450 to about 520, probably suckered in some bulls there, and now it's dumping off. And for me, I'm in with a very small position. I'm not freaking out. I have a lot of cash ready to rock and roll, and if it goes lower, I have that opportunity to add more if I want to. So, and same here with Tesla, guys. I mean, Tesla, if we go back to it, it saw a bit of a rally in the past 48 hours, 24 hours, but you guys can see on this 5-day, 5-minute, we're failing to break out of that downtrend, right? We're starting to see some sell-offs, some selling, profit-taking, whatever you want to call it, at a lower high here, and we fail breaking out of Friday's high, or whatever day that was. Yeah, that was Friday's. So Tesla could very well go lower from here. Same thing with NVIDIA, which again is why I'm pretty cash-heavy at this point. And again, let me know in the comments, what are you guys doing? Are you cash-heavy? Are you more in the markets? I would love to know. And I'm also still in Apple, riding this one at $126 per share. Very similar technicals to NVIDIA and Tesla. Lower low looks like it's going to be pushing. And I also have GDX and GLD still to have some exposure to gold. So nothing really changed today for me, guys. Again, I'm not looking to force anything at this point. I think the markets could still go lower, especially if those technical levels break, those support levels break that we talked about earlier in this video. And the best way to kind of hedge against the markets going lower, yeah, you can short the market, you can play put options, which it's a bit more advanced. I do that sometimes as well, but you could just have cash. That's an easier, beginner-friendly way to hedge against the market. Yeah, have some offense, play offense, have some positions, but also play defense, have that dry powder, have it ready to go, because for all we know, the markets could go much lower from here, and we have to be prepared for anything. So let me know down below, what do you guys think about that? And now let's get into some earnings reports. We had Chewy report, ticker symbol CHWY, and this is a company that sells dog treats, dog products. I think is it only dogs? I'm pretty sure it's only dogs. And I really didn't have much experience with Chewy until recently when I got my dog, and I started shopping from here, and I think it's a pretty good service. And we can see the stock went from $74, $75 down to about $56 recently, shedding about $20. That's equivalent to about 25%. And no one's going to argue with you and say at $75, this was a good deal, right? It was very overbought, arguably frothy. The RSI was at about 90, so no one's going to argue with you and say, yeah, it's amazing to buy it there. But now that we're seeing a pull down 25%, we're approaching this 180 SMA, which is held in the past, and earnings were they were okay. They reported 1.7 billion in sales, which beat estimates. Their earnings, they don't have earnings. They're losing money, but their loss came in at 32.8 million versus the loss of last year, same quarter, 82.9 million. So they're trimming down that loss. So Chewy's doing decent, and in this time period where it's online, well, I don't know if that's going to last. Well, of course it's going to last, guys. I'm being sarcastic. Well, now that we're online, we're seeing all this shopping, and if the trend's going to continue, this could be a business model moving forward that could bring a lot of more business. But the truth is there's risks, right? Because Amazon could come in and sell these animal products for cheaper. Then what's Chewy going to do, right? So you have to really analyze it in that perspective and make a decision. But in the short term, again, if we're looking to trade this, maybe not invest in it, but if we're looking to trade it, maybe a $55, $56 high or low bounce off could be nice here with Chewy, and maybe we can make some profits there. But overall, again, I'm not looking to force anything. I'm being patient and waiting for the opportunity to open up to me. And Peloton, PTON, just reported earnings as well. I've been a skeptic of this company, right? I'm not too crazy about it, honestly. Maybe it's because I don't like biking indoors. I rather bike outdoors, or I think their products are too expensive or whatever, although I know they are making a cheaper bike moving forward. But I think this is very, very frothy, quite honestly. I mean, it's gone from $17 during the crisis up to $100 right now, and I'm not looking to necessarily buy it here, but their earnings were pretty solid. EPS came in at 27 cents versus 10 cents, so almost a triple beat there, a triple up in terms of what estimates were. Revenue came in at $607 million versus $582 million, so they beat there. And connected subscription workouts grew 333% in the quarter to over 60 or 76.8 million. So just because I don't like it, guys, doesn't mean that the business isn't doing well. And that goes to show. That's another lesson you can take from here. And I've known this, but just to tell you guys, just because you don't like a business or you don't use their products doesn't mean that other people don't. Doesn't mean that their products aren't good, right? So kind of take yourself out of it. That's what I do, and I always try and talk to you guys here on the channel. Take yourselves out of it. Put yourselves in other shoes. Take your emotions and your personal feelings out of it to make decisions. So doing that and looking at data, the business is doing well. Just even though I don't like it, I don't really like it moving long term, right? I'd rather put my money elsewhere, but it's doing pretty well. You cannot deny it. And despite it being frothy, in terms of the stock price, the business is doing decent. And maybe we can make some money on a pull down here if we see, it happen. But as of now, it's up a good amount after hours, and it's pretty overbought, so I'm going to be patient with it. And Oracle also reported today, good old Oracle, and they're up a good amount after hours. They reported EPS of 93 cents versus 86 cents estimated. Revenue came in at $9.37 billion versus the $9.19 billion estimated. And I don't know about their guidance. Let me double check for you guys here on the app here on ThinkOrSwim, the live news tab. I don't really see anything about guidance, but overall the stock is up a good amount. I mean, today at the closing price, it was up 0.67%, so a nice green day for Oracle despite the markets being red. And after hours, it's up to about $59, so it's up another $2 after hours. So we might be able to get some sort of momentum play here with Oracle, despite it already being at a high here on the 4-hour. I'm not sure if this is all-time highs. Let me double check for you guys. Yeah, we're right about at all-time highs, close to it at this point. So yeah, watch out for what happens with Oracle. And another very speculative turnaround type stock here that reported earnings that I want to talk to you guys about is Play, also known as Dave & Buster's. I know you guys have gone there. You played some, a little basketball, the little arcade basketball. You played some zombies with the guns and whatever you wanted to do. That was fun. Dave & Buster's is fun. Maybe you can drink a little beverage there, whatever, shoot some pool, and it's a great place. But in reality, in this time period we're in, it is not doing that well. The stock's gone from $18 today at the close. It's down to about $16, $17 after hours. And you guys can see here, if we pull up this 4-hour chart, the stock is right around a big support, $17.50 to about $18. And they ended up reporting pretty bad numbers because, again, it's trading down after hours. EPS came in at negative 124 versus negative 139. So they beat on EPS, not that bad. But the bad part, the really bad part, is the revenue. The revenue came in at $50.8 million versus $80.93 million. And we can see here they ended the quarter with 84 reopened stores in 27 states. So their earnings aren't that great despite them reopening in many states. And I don't know if this is going to get better. I mean, yeah, you can speculate it's going to get better. I'm not too sure they're going to end in bankruptcy because they do have some cash. You guys can see $224 million in cash and cash equivalents at the end of the quarter. So that's not that bad, but you guys have to realize that they're not providing guidance for the rest of this year. They're still at risk. If we see another shutdown across some states, who knows what's going to happen? This could put this stock in the gutter. Let's just be honest. This company at that in the gutter, and the stock could go down. I mean, take a look. It went from $50 to $4 back during the beginning of the crisis and that whole crash. That is unbelievable. That's unheard of type of movement there. But if we get positive vaccine news, whatever, economy opening up fully across the states, everything slowly going back to normal, whatever, we could end up seeing a move from 18, maybe back up to the mid-20s. So that is the little speculation. I mean, that is the move that's possible, but it really relies on a lot of speculation. And we're going to talk about some other stocks now. Nikola, NKLA. We got some news today from a short seller. And guys, you have to realize short sellers out there, and I'm not siding with Nikola here or the short seller, whatever. I don't really care, to be honest, but because I'm not really invested in Nikola. But a short seller came out today and said that this company, Nikola, is a fraud company pretty much, right? We believe, and he said here, I believe his name was Hindenburg. I think his first name might be Paul. I might be mistaken on that, but his last name's Hindenburg. And he said, we believe Nikola is an intricate fraud built on dozens of lies over the course of its founder and executive chairman, Trevor Milton's career. He wrote this today, citing phone calls, text messages, emails, and photographs as evidence, and I don't know if that's true or not. This is all allegedly, right? And short sellers, and this is back to what I said, guys. Short sellers, and hear this out, they often publish negative claims about a company in order to drive down a share price and boost their own profits. And guys, Hindenburg is a short seller. He has a short position, so he's trying to paint a negative spotlight around Nikola. And I'm not defending Nikola. I'm just saying, even if this is true or not, he's still trying to display this negative spotlight to benefit his short position. So, and now we're seeing Milton come out and said he called this report a quote-unquote hit job and said it was done to slam shares of the company, which had seen its market cap soar to $16 billion at Wednesday's close, up from $340 million on June, the day of its NASDAQ debut. So Nikola's down a lot. I don't know if it's going to go lower, and I don't know if it's going to go higher. But moral of the story is that this guy Hindenburg, he could very well be just writing this article. He might not have any evidence. He might not even know if Nikola's a fraud. He might just be doing this because he wants to profit on the downside because he has a short position. So watch out what Nikola does here. We got hit today about 11%, yeah, on this news, whatever. But watch out what happens on this little uptrend that I drew for you guys on this 4-hour. And if I zoom in a bit on the 90-day chart, you guys can see it. I mean, if we bounce off 35, 34, whatever, maybe we start to see a little relief rally here, considering it's gone from $53 down to $37 in the past couple of days. So there might be a little bit of a bounce back there if we do hold this trend And another stock similar to Nikola, SHLL, which is merging with Helion here. This one could also be a momentum play, right? We're seeing it's $10 off its highs, $10 from $58. That's around a 15% sell-off. Overall, we're not doing that bad considering the markets are selling off. I mean, yeah, it is down a good amount, but the uptrend is still holding, so we'll see if this holds. Right? This could be a play, from $49 to $50 breaks. If we pull up this 5-day, 5-minute, you guys can see, if let's say this little downtrend breaks from yesterday into today, this wedge, right? If we pop above 51, 52, shill could be going maybe not to the moon. It's not going to explode, right? I mean, it could, but I'm not sure. But it could go from 52, let's say, to the mid-50s, 58. It's that type of stock. It's very volatile. It moves aggressively. And another one here is Run. Good old Sunrun, guys. Ticker symbol RUM. This one went down from $59 to $42 in the span of 2-3 days in that massive tech sell-off. And it bounced from 42 back up to 56. Now it's looking to test those highs from, it was literally about a week ago at $59. And if it holds this trend, which it seems like it's looking like it is, it could maybe push it up to 59. So I'm looking at this as a momentum play. The dip down today earlier could literally just be a launching pad up to those $59 levels, which gives Run from where it is now up to $59.60, around a 6-7% potential for profit. And a couple of other ones here. Beyond Meat today, guys. I called this one out, but I did not pull the trigger on this one. I'll be completely honest. I did not pull the trigger. It was up 3.5% today, and it was up even more earlier. It hit $149, but ultimately it pulled down. Some profit taking, a healthy pullback heading into the close. And you guys can see on the 4-hour, we're finally breaking out. We've proved 125 to be a pretty solid base support, which we've been calling out. We took out $135. Now we finally took out $145 too, with that pop to $150 earlier, but now we're trending under it. So I'm not saying I'm bearish on Beyond Meat. It's quite opposite. I'm bullish on the stock, but I think short term we might be seeing a pull down to retest maybe 135 to 140. So if we do get there, I might buy on the pull down on this particular stock, as I do think it could get back up to 150 to about 160. So the next one here is Uber. Uber somehow pulled a green day today, guys. Ticker symbol UBER, up 3%, breaking out of $35, big resistance. And now we've entered into the next channel here on Uber, which is $35 to about $40, $39, $38, right around there, right? So from 35, 36, I can see Uber maybe making a move on momentum up to about 35, or not 35, 37 to 38 on this little move here. So watch out for this as a nice momentum play. And you guys can see on the 4-hour, I mean, we've struggled breaking out of 35 for months at this point. So the fact that we just did, that is extremely, extremely bullish. And another stock here, restaurant stock, McDonald's, is doing pretty well in the weakness of the market as well. Up 0.7%, up $1.50. We hit all-time highs today, pretty close to them, $219.50, and I think the all-time highs at $220 actually. So let me double check that for you guys on this 20-year chart. Yeah, it's $221. So at this point, we're approaching a big resistance at $220, $221. So if McDonald's was able to break that, squeeze above it, watch out. This stock's going to be moving, I think. Maybe to 225, 230. It has that type of potential here. And quite honestly, these restaurant stocks, the big ones like McDonald's and Starbucks, I think they're gonna be strong here. And I've been buying these a lot, and you guys know if you've been following my M1 Finance portfolio, which is the only public account that I share with you guys here on YouTube, I've been buying that stock, right? Same with Starbucks. These two, I think, are poised to bounce back And ever since I've been buying them, 190s for McDonald's, 70, 75 on Starbucks, they've been doing well. And on top of that, they pay a nice dividend, very nice dividend. Both of these companies do. And I think they're pretty safe dividends at that. So you can't really go wrong with these businesses, right? And Starbucks here approaching $85. This is a pretty big support on the stock, right? Considering it was a high from back in the beginning of June. If we hold this, we might be able to make a move back up to 90, but don't get ahead of yourselves, guys, because we're still downtrending on Starbucks here on the 5-day 5-minute. If we take out that low from yesterday at about 84, 85, we could be filling back to the lower 80s. So be careful with Starbucks. And the last one here, which is beaten down, the trend's not that attractive, but I'm still interested in, is Intel. Ticker symbol INTC. You guys can see the rally ended up failing at about $52, $53 as we got rejected by that 180 SMA. Now it's looking like we're testing the high 40s again, where we did struggle at for a good amount in the month of August, but we really did slowly recover from 47 up to the high 40s. So we'll see what happens, guys, overall with Intel at this price. If I pull up this 20-day chart, you can see we are approaching a little support here at about 48, 49. So maybe we can make some sort of rally back up to test 50, 51 again. So that's pretty much it for this video, guys. I hope you all enjoyed it. Let me know down below in the comments, what are your thoughts? Don't be shy. What are you trading? What are you interested in buying here? And I'd love to know your thoughts on the markets in general. And just to quickly list the stocks here that we talked about in the video, we talked about Workhorse, Tesla, Apple, GDX, GLD, Chewy, Peloton, Oracle, Play, also known as David Buster's. We talked about Nikola, Shill, Run, also known as Sunrun, Beyond Meat, Uber, McDonald's, and Intel. So hit that like button for me, guys, and also consider subscribing. And I think I already said that. And join our Discord chat. It's free. Our Facebook group, it's free. And also, you know what else is free? That stock down below. It's valued up to $1,600. It's literally free money, guys. All you have to do is deposit $100, and that is when you get your free stock. So I'll catch you all in the next video. Thanks for watching, as always. I really do appreciate you guys for tuning in with the channel. It means a lot to me. Stay safe. Peace out.